right. Good afternoon. Check, check, radio check. Man, can you believe it's December 12th already? 2024 is behind us. It is the election is behind us, which I think will be evident in the rear view mirror look of the markets, even though this says December. We're really going to be talking about November. And I think it's pretty evident from when you look at a couple of the charts how the markets responded to the outcome of the election. That being said, the other amazing thing that me and my wife and I mean everybody's talking about is what is with these drones, right? We got things flying over New Jersey and nobody knows what's going on. And I just listened to a talking head right now just say they do. Somebody knows what's going on. We need to get to the bottom of it or implement a policy that allows us to get to the bottom of it. But anyway, I want to make sure we're in the holiday seasons. I want everything and all things to be very festive. We got one more call next week. That'll be with one of my longtime acquaintances, Victor Kale. And we're going to be talking about reverse mortgages as a tool in your retirement planning. So without further ado, let me go ahead and get started. Let me take us through some of the charts. For those of you who have not been on this call or are familiar with some of what our topic is, really what we try and do is we look at both the equities and the income portfolios in different sectors and in different indices and saying, hey, how are they performing? And, when we look at, high level, we look at the month of November, how is yield? And you can see like right here, November 4th, right after the election, I mean, the small caps just took off. They love that news, right? So, it just, and then everything, pretty much was positive for the rest of the year. We had a couple negatives, obviously, commodities, and lesser, let's just say, attractive investment areas. But, I always just, although one month is neat to look at and seeing, hey, what's going on for the year, this is really why I think everybody is looking at this and a rear view mirror look. We have a bunch of spaghetti, a lot of data in here, but the S&P just, the US markets, this dark green right here, things have done well. And this is why you just, you have to have strategies that allow you not to get so caught up in the day-to-day noise that somehow we try and time the market and therefore we're ended up shooting ourselves in the foot. I've seen over my career, I have some clients that are very, very conservative and sit in cash and because they're so afraid of losing. But the challenge with that is sitting in cash, having some money in cash is always wise. But diversification is prudent. And when you can pick an ETF, an index, and start to spread amongst several say companies, sectors, and philosophies, you do well. But I really was between the U.S. It just shows me that the U.S. is resilient right here. The top two holdings are the S&P 500 and the Russell, right? And then followed shortly by the Dow. So it just showed you that we shrugged off any uncertainty during the year, of which there is still plenty, right? I mean, when you think about drones aside, right, we have uncertainty in China, right? And what do they do with Taiwan? You now have North Korea, sort of supplying Russia and in that conflict over with Ukraine, right? So with some of that stuff, we're always going to have global uncertainty. And that's why, I'm not saying that we can't be in some of the foreign markets, and sometimes it is a good diversification so that we're not necessarily coordinated with assets. But my money's usually in the American economy. So I was very glad to see this chart come out. And then, this bull bear indicator chart that we have, we call the three wise men. you look at the green line here on the right, and it's still an upward trend, and things continue to seem to be on an upward trend. So whenever I look back, there have been some short periods where we flipped, but if you look back, we have periods of time where we continue to run up. So even though in 2022 COVID hit, we had some downward pressure. When you look at this chart from 2020 to now, where will it go in the future? I don't know, but the indicators, the signs for the economy, we seem to have tailwinds behind us. Doesn't mean that there aren't some storm clouds to be concerned with, and we can guide around them. But overall, my takeaway for what I see both for the year and forecast into the future, I'm more optimistic than I was, say, at the beginning of last year. Even though I said it's an election year, we have to be cautious. I just because we're reading the indicators or the gauges or the alarms, right? We just want to be aware so that we're not caught unprepared. And it's not so that we're never in a panic or, oh my God, the sky is falling type mindset. So I'm just very comfortable with what I saw. And then now we're going to segue over into the income, right? So if you've now entered into retirement, we're trying to get some type of yield off of our investments. How are the bond portfolios holding up? And for the month of November, everything had was positive. I wouldn't want to eat off of a 1.5% yield or 2% yield. But at least for 1 month, it did okay. Now for the entire year, the only one was the high yield ETFs. So that's getting a little bit, but a little bit more into normalcy. I like to see yields in the 4 to 6%. We are creeping back up. So that is also to me positive. And then you have the negative here in the 20-year treasuries, right? So right now, the charts are showing a positive trend. The chart here, the thing I wanted to point out here, I think we're close to a crossover again. I think we could start to see a green line develop here, which will ultimately be good for the economy. So, I know that these calls are typically, anywhere from 15 to 30 minutes. But, when there's good news, we don't need to just fill time, air, and space with just, nonsensical or unimportant matters as they relate. I do want to share with you why I was sort of pleasantly surprised to see this chart. This is the recession probability analytic tool, which has a 12-month forward look. And this right now has dropped below the 50 percentile. So you can see that just even last month, we were up around that 57. After this election, it is the recession or all the fears have really been, sort of alleviated or lifted, or people are feeling more confident, consumer confidence, and just I think overall you're seeing from a societal standpoint, people are saying, okay, that's behind us. Let's now focus on what's important. And that brings me to my last topic. Before I get into, obviously we're gonna have Victor on next week, and it'll be our last call. Then I close my office for the last week, but I will share it again next week. But I just want to, if you're for whatever reason aren't able to make it, from my family to yours, all of us, the professional planning services, to all of you that attend these calls, we appreciate your support. We're here to help. But Merry Christmas. I'm not afraid to say it. I will say it loud. I will say it proud. Merry Christmas to everybody on this call. If you need me, reach out, call, say hello, send an email. We appreciate all of you. And again, we're here to help you and to serve you. And don't keep us a secret. So without anything further ado, I wish I could extend it and just fill in a bunch of time and slides, but I think you guys get the gist. Everybody, I'll see you next week, and stay safe.